Hello, welcome everyone. We're going to get started now. We're a couple minutes past the half hour. Welcome to today's webinar that I'm very excited to be hosting, From Budget to Blueprint, all about financing your ADU. I want to introduce myself. My name is Anna Alexeyeva, and I'm the director of the ADU Resource Center of San Mateo County. The ADU Resource Center is an independent nonprofit whose goal is to provide resources and tools to homeowners to help make the ADU process easier and more accessible to you, with a focus on San Mateo County residents. I'm very excited today to be joined by Lindsay Moon, who's a licensed loan officer as well as a green prefab builder in the ADU space. Thank you so much, Lindsay, for joining me today. I'm really looking forward to picking your brain about all things ADU financing related. And before we get started, I want to say a few notes of housekeeping. First of all, we do have Q&A enabled, so you can enter any questions you have into the chat, and we'll go through questions at the end of the presentation. We are recording this webinar. You'll be able to see these slides and reference anything you missed through the recordings, which you can find on the ADU Center's YouTube channel. You can find that at ADU Center of San Mateo on YouTube. You'll also be able to find that on our website, smcadu.org. If you would like this presentation translated into another language, you can hit the CC button at the bottom of your screen and choose what caption language you'd like to receive translation in. And finally, I do want to point out that while I'm very lucky and excited to be joined by Lindsay today, the ADU Resource Center is a nonprofit. It is an independent organization, and it doesn't endorse any particular company or service. With that said, I do really appreciate Lindsay taking the time today to share her expertise and insights on financing your ADU. Before we get into the meat of today's presentation, I did just want to share a little bit about the ADU Resource Center if you're not already familiar with us. You can find us, like I said, at our website, smcadu.org, where you'll find a suite of resources and materials for homeowners to help demystify the ADU process. You'll find resources like a detailed ADU guidebook with step-by-step instructions or overview on building ADUs. You'll find information about ADU standards and rules in different communities across San Mateo County. You'll find stories from neighbors who have built ADUs and a lot more information. The mission of the ADU Center is to help get more ADUs built across the peninsula, because we believe this is a valuable housing type that can help add more units to an area that is economically rich and vibrant, and we want to provide resources for you to help make that happen and help make your ADU dreams a reality. This is just one of the resources you'll find on our website that I already mentioned. It's the ADU guidebook, and if you are at the beginning stages of researching ADUs and thinking about a project, I do encourage you to look at this guidebook. It's 70 pages and provides a lot of really detailed information that's specific to San Mateo County about the different steps of building an ADU, from getting started through budgeting, which is going to be our conversation today, through design, construction, and finally moving in. And I do encourage you, if you want to find out more information about resources like this and other things that the center has to offer that are free for homeowners, to stay in touch with us. You already have the link to our website, but we are all across all social media channels. So if you follow us, you'll find more information about webinars and events that are coming down the pike, other services that the center is offering. You can sign up for our newsletter to stay up to date on information and resources from the ADU Resource Center by accessing this QR code, and I'll give you just a second if you want to take a photo of that. And finally, this is hot off the presses, but I wanted to share that we just went live with tickets for an ADU fair that we are hosting on Saturday, May 10th. It's going to be in the morning at the Twin Pines Senior and Community Center in Belmont. We have a great lineup of vendors, industry professionals, informational sessions, and real-life ADUs that you'll be able to tour. The event is completely free to the public, but you do have to register, and the QR code here that you can scan has the link to the Eventbrite page that has more information about the event and will allow you to get a free ticket. We will have this information as well on our website coming out soon and on our social media channels as well. Okay, with that, let's get into the meat of today's topic, which is financing your ADU. So I want to start by talking a little bit about budgeting. Homeowners who haven't done a ton of research into the ADU process are sometimes really surprised at the cost of building a new ADU. And there are a lot of factors that are outside of your control that can affect the cost of your ADU. These factors include anything like whether you're on a hillside or a flat lot, what fire regulations govern your property. So if you, for example, live in a high fire hazard severity zone, what the soil conditions are on your property, or if you have septic, and what, if any, utility upgrades will be required to build your ADU. As a general rule of thumb, though, in San Mateo County, you can expect the all-in costs for your ADU to come in anywhere between $450 and $600 a square foot. Now, this is all-in costs. And when we talk about construction, we think of a couple of categories of costs, which you can see in the yellow table here. We think of soft costs, which are everything from design through engineering, assessments, and permitting. And we think of hard costs, which are the nuts and bolts of building. We also think as part of hard costs of infrastructure. So this is utility upgrades, which can add significantly to your budget, depending, again, on the circumstances of your lot and property. On the right-hand side here, you can see general cost ranges for different types of ADUs at different sizes. It may be counterintuitive, but what you see as you look down this table is that cost per square foot actually goes down as you have larger ADUs. Now, a lot of people think that they'll save a lot on costs if they build a really small ADU. And to some extent that is true, but keep in mind that there are economies of scale in building a house. So no matter if you're building a 500 square foot ADU or a 1,200 square foot ADU, you're still going to need a bathroom, you're still going to need a kitchen, you're still going to need foundation. And these are the costs that will really add up and will have economies of scale if you do have a larger ADU. The type of ADU you're building will also affect the cost a lot. So a conversion of existing living space or a JADU will likely come in less expensive than a detached new construction. So there are a lot of factors, like I said, that are outside of your control that will affect the cost of your ADU. But there are also factors that are within your control that you can keep in mind if you're looking to be budget conscious. Some things to consider is that finishes can really add a lot to the end cost of your ADU. The number of bathrooms also matters. So really think about, do you need 2 bathrooms in your ADU, or can you get away with 1 bathroom? As a general rule of thumb, you can expect a bathroom to come in anywhere between $15,000 and $25,000. And then the layout of your ADU also matters. You can design your ADU to be more cost-effective or less cost-effective. For example, if you situate the kitchen and the bathroom along the same wall, you can save on plumbing. On the right-hand side here, I have what seems like a laundry list of fees that you might be expected to pay as part of the permitting process. Now, this does seem like a long list, but the thing you should keep in mind is that fees, while they can add up, ultimately are going to comprise a fairly small proportion of your overall budget, because the cost of building an ADU ultimately mainly come down to construction and infrastructure. Having said that, this is a list of the types of fees that you can expect to see depending on your jurisdiction, and every jurisdiction does have a different flavor of what fees they charge for permit applications. What you can expect to see is building permit fees and planning permit fees, because the building and planning departments at your local municipality will be reviewing plans. There might be fees from other departments. There may be development impact fees. These are fees that are associated with the infrastructure costs of adding a new unit to the area, like parks and roads. The thing to keep in mind about development impact fees is they're only assessed for ADUs that are above 750 square feet. You may have utility fees, particularly if you're building a new detached unit. You may have septic fees if you're on a septic system. and likely school district fees. According to state law, school district fees can only be assessed for ADUs that are more than 500 square feet. Every jurisdiction, like I said, will have a different flavor of what fees they charge. Your jurisdiction should have a fee schedule or may have a fee schedule on their website with information about fees that you can expect as part of the permitting process. If you can't find that information easily online, you can contact the planning department or the building department at your local jurisdiction and ask them what kinds of fees you can be expected to pay as part of the process. A resource that I want to make you aware of that, again, is on the smcadu.org website is the ADU calculator. And this is a great resource if you're at the beginning stages of researching what your project might cost. And what you can do is put in information about your property, some details about your project, and some other information, and you'll get an estimated range of what the development costs might look like for your ADU, as well as monthly expenses and return on investment. This is a good starting point to get a rule of thumb of what you might expect your ADU to come out at. And the last thing I want to talk about is timeline. A lot of people think that, an ADU is a small house, so it's a quick project, but at the end of the day, building an ADU is building a house, and so you have to keep in mind that the timeline can be significant. Generally, you can expect from starting to finishing the all-in timeline to be anywhere between 9 to 18 months. That includes things like pre-construction, so planning and design. This timeline is important to keep in mind because if you're building your ADU for a particular purpose, like for example, housing a loved one or a relative, it's good to know what the lead times might be that you can expect. And timeline is also important as you're thinking about financing, as Lindsay is going to talk about. So with that, I'm going to pass the mic over to Lindsay, who is going to talk more about financing options and considerations for funding your ADU project.
Thank you, Anna. And I props to you. That was a great presentation, as well as I can attest to the ADU calculator. It's been tremendously helpful in a lot of ways, and I encourage people to use it. Well, thank you for tuning in. And I'm Lindsay Moon, an independent mortgage officer with Pro Mortgage. We're an independent brokerage, and well, let's dive in. Can you go to the next slide, Anna? My background is in construction, and I have been in finance for many years now as well. And so I kind of work double time. I've got a lot of experience in the housing world as a whole, and I love what I do as an independent broker because I'm really looking at you holistically and organically to see what is going to be the right fit for you. And I want to be your, mortgage officer for life. I want to help you in however you may need your financing. And there's a lot of different products out there, a lot. But let's get to ADUs. They are so helpful for our housing issues and are solving them in a responsible way by creating, infill housing. We already have a large footprint. There's plenty of space, and we're not compromising anyone's privacy with these. And what we're truly seeing right now are that ADUs are increasing property values 18 to 35%, which is huge. That really, it's, return on your investment is almost immediate. What I suggest when there's three kind of phases. It's like, I want to build my ADU, I'm ready to build my ADU, and here's my ADU. And that first part really begins with the conversation. It begins with the feasibility of it all and what are you able to build, and truly along with financing, and whether or not you're planning on biting off that financing now or down the line. It's a good idea. It's very much like buying a home or a large purchase. It's like you want to make sure that the financing will be attainable. So just know that that's really important. You don't want to go down. I've had people go down that line of planning for their ADU, permit in hand, and they're struggling to find the right financing. So it's really important as a first step. And I'm often working with people months and years, sometimes before they're ready. I definitely recommend,
Sorry, go ahead.
yeah, I'll just finish up. And is now a good time is a question I get asked a lot about, is this the right time? What do I do? It's always the right time if it's the right time for you and if it's attainable for you. When rates and rates actually did recently just today drop, but as rates potentially continue to drop, there's going to be more of a demand to do this. So the sooner you do this, the sooner you're getting on your way. And also the long-term game plan is to refinance once you're done construction. Next slide. Like I said, I really recommend using an ADU company that takes you through that feasibility, that pre-construction process, but then also helps you with the construction process. Some ADU companies have do the construction themselves and are licensed GCs. Others will help you find the right GC to help you build your project. And with construction, it is not an exact science, especially when you're tying into, if you're doing, tying into existing conditions of a home, that is, can be sometimes even more expensive than if you were just to build ground up. So always have a little what if, just in case. That's very, very important. And so the long-term game plan with an ADU, like I said, is you want to refinance after you're done because not only potentially have rates maybe dropped, but you've now built your ADU. You have now increased your property value significantly. You may also have now a rental income from the property that you can help to qualify. Like maybe we had to go with an out-of-the-box way to qualify you initially for the ADU financing, but now that you're done with that, we can dive into something more traditional and save a bunch. So that's the long-term game plan is to refinance. And you certainly, it pays to shop around, but know that a mortgage officer, an independent, does perform that service for you. And, we as mortgage officers, we partner on a wholesale level with many, many different banks and lenders so that we're beholden to our clients and finding the right financing for you. However, there are different types of lenders out there. There are credit unions, and I will say that sometimes local credit unions, they do have some unique programs. So, and not, we as loan officers, we can't always touch every single credit union. So those are ones to ping, especially like if local, the more local, of course, the better to where you're building. And then, there are, of course, all these banks and lenders out there, but we as independents, we know these different products out there. And I'm going to get into what are all these different products that are available for ADU financing. So next slide. Excuse me. Like I said earlier, the first step is your pre-approval. And this does not have to be right when you're ready to bite off the financing. The pre-approval is just between you and your mortgage officer. We are seeing what you qualify for. And as long as you don't have a major life change circumstance, your job doesn't drastically change or you've lost your job, then that financing will be attainable. And that should give you that confidence to then start that pre-construction. And as you get closer to the time where you're ready to have your permit in hand and you're ready to build, then but also check in with your loan officer, because that may be 6 months down the line. You may want to get your financing in place early on to help with some of the pre-construction costs. So with that, with a pre-approval, you're going to be likely submitting loan documents like you would with a refinance or a purchase, but we really need to see your full picture and see what you're going to be able to obtain in terms of financing. And there are both kind of in-the-box solutions, and there's also out-of-the-box solutions. And furthermore, with that pre-approval, since if we're working well in advance, we can also do a soft pull on your credit, which does not ding your credit and it does not show up on your credit. So that's something that's important, and to make sure you speak with your mortgage officer to say, hey, I want to do a soft pull initially to see where I am. And then obviously, we're going to need a hard pull when ready for the financing, but that may be quite a chunk of time. Next slide. So really quickly, these are the loan types for ADUs, and some of these it may be, a bit of a jumble. So I'm going to dive into each one of these, but what I like about this slide is like, anyone thinking, oh, there's no financing for ADUs. There's tons of financing for ADUs, but I think it's not always what people think it is. So let's dive into what is out there for different products. And first is, refinancing your primary mortgage. And that's not a favor to a lot of people that have their low 2 and 3% interest rate. So I get it. There's definitely solutions, and we'll get to those in a minute, where you don't have to touch your primary mortgage. And but these ones are for new home buyers or those that recently purchased and do have a higher interest rate. There are quite a few products where you can refinance and get the cash to build your ADU. You can buy a home as well that does not have an ADU and use they're called home style and reno choice loans to actually buy the property and then build your ADU. So lots of really unique and ways to certainly to if you're not finding the property that you want and you want to buy a home that has an ADU, consider buying a home that has the ability to have an ADU. I like to say with any sort of refinance purchase, if you're pulling cash out of your property, you will be able to use those funds how you want to. But if you are using the home style or reno choice loans to build an ADU, you don't necessarily have like the full autonomy with the funds. There is like fund control from the lender because of that. So lots of different nuances in these products. And again, once I do speak with a client, we can dive into the different options that make sense for them. But there's definitely refinance and purchase options out there. Next slide. The most popular one that I'm doing for ADUs, especially right now with not touching a primary low rate mortgage, are the HELOCs and HE loans. These are secondary mortgage products. They sit behind your primary mortgage. It does not get touched. It stays the same. That's that. The seconds, though, because they are in second place, there's more risk for a lender. It's a different pricing setup. And so it is going to be higher in rate. They're based upon the prime rate, which is 7.5. And then there's going to be a margin on top of that, which is all based upon things like how much you're pulling out, what your credit score is, the overall LTV or loan to value. So these seconds, I'd say, range anywhere from 7.5 all the way up to the double digits, depending on your circumstance. HELOCs tend to be variable in rate, but some lenders have fixed HELOCs. And there are also HE loans, which are a fixed rate, very much like your primary mortgage. It's like a 30-year. Once you close in one lump sum. But all of these lenders they're proprietary, these secondary mortgages. They have different products, and it can be very dizzying to know who has what and how they qualify. And different lenders, it's like they say they qualify the same way, but they also sometimes have rules and what we call overlays on top, which you may go to one specific bank and they say, I'm sorry, you don't qualify, but you may send the exact same information to a different bank and you may qualify because they're not as conservative. So just lots of things to keep in mind with financing and how you go about your journey. And there are also, with these HELOCs and HELOANs, the majority of them you do have to qualify in a conventional manner, which is tax returns and your income documents. But there are also out of the box ways to qualify for these HELOCs and HELOANs using bank statements. Great for those that are self-employed. There's the ratio loan or DSCR loan, which is about what only for investment properties, but what the income generates from that property and does it cover the mortgage payment? It's about that ratio. And there are also reverse seconds, which I'll get into in a moment as well. The HELOCs and the HELOANs, you do have the full use of the funds for your project. So you don't have somebody looking over your shoulder. There's no fund control. You can use it how you need to. Next slide.
And sorry, Lindsay, I think that there's a ghost in this PowerPoint that's making the slides move faster
I think
than
it's on that like slideshow setting where it like sets the thing, but don't worry, it's fine.
yeah,
It's adding some character.
yeah.
The reverse and reverse seconds. A lot of people cringe when they hear reverse because there was a time when these things were not that great, and that has long since gone. They can be really great for the right people. I always suggest talking to your CPA or financial advisor about them, as well as myself, but talk to somebody that knows your finances. You definitely have to be over 62. The reverse mortgage, first of all, reverse, the interest accrues on the back end. So there's no monthly mortgage payment. The reverse second has been nice for those that have a low rate and a low payment primary mortgage, but don't have the income to cover the second mortgage and are over the 62 mark. Then you can utilize some of that equity using a reverse second, not creating a mortgage payment. And then the reverse, you can pull cash out, you can buy. There's a lot of different nuances to those. But they are a fabulous product for the right person. And you certainly have the full use of the funds. You absolutely have to continue to reside on the property if you have a reverse or a reverse second. It is only for your primary residence. That is it. Next slide. This is a cool one. This is called an ARV HELOC. ARV stands for After Repair Value. It can also, there's another acronym, ACV, which is As Completed Value, very interchangeable. This is, oh, I forgot, I put that on the slide. Sorry. This is for those that don't have enough existing equity in their property. So if your mortgage you're pretty much maxed out, you can't access with the HELOCs and HELOANs and refis enough equity. This is about what your property will be worth as completed. And so to the point we brought up at the beginning of my portion of the slides of ADUs increasing your property value 18 to 35%. Well, if your home is going to be worth, let's say 35% more, and this ARV HELOC allows you to pull out up to 95% of that as completed value. Well, I've helped a lot of people already that have not been able to obtain that financing by using the as completed value. And this one is super cool because once you're done construction, it turns into a regular line of credit. You definitely have to use a licensed GC. The GC has to be approved by the lender, so in good standing, all of that stuff. You do have to submit a plan set and a permit. So there's an appraisal. It's very much about what you're building. You can even use these for home improvements like kitchen remodels, bathroom remodels, any type of ADU, but it's really important that, it's about what you're building and what is that ARV value. And again, there will be appraisal based on comps in the area, but it's a very successful program despite the fact that, ADUs are still getting started. And you have the full use of the funds, which is great. There's a couple of nuances to that. There's somebody that checks in with you, but for the most part. And the reason why I say, you have full use of the funds is because we go to my next slide, which I think is
Can
construction
I
loans.
can I just ask a quick question on this one, Lindsay? So what's
Yeah.
the catch here? This seems like a really great product. Is there a catch? Are the rates higher for these?
Well, they are second mortgage, so you get to you keep your primary mortgage in place. Okay. So yes, the rates are a little bit higher. I don't like to say rates, but they've been competitive with the secondary mortgage products for sure. They're not out of line with anything, and it definitely depends on credit score and such. There's not much of a catch. It is a great product, and for the right person that does not have enough existing equity, but knows that they will when they're done. And again, the long-term game plan too is potentially is to look at refinancing when done. So yeah, construction loans, people always think and assume, or not always, but often think that you need a construction loan. And that's actually the last thing that you want. It's if you have enough equity, or if we can use the equity to give you the full autonomy with the funds, meaning you get to use the funds how you need to, it sure makes life a lot easier. There are construction loans. I do them all the time. And especially for investment properties and things like that. But for construction loans, they are short term. You will have to refinance out of them. You do not have full autonomy of the funds. It's very much, the funds go into an escrow account and are released to your contractor based upon certain milestones. So if you're doing a construction loan as a homeowner, you do tend to sometimes be pegged between your contractor, who's like, I need to get paid, and your lender, who's like, he hasn't really finished this, so he needs to finish this before we release funds, and it can be a bit tenuous. So not always, but it can be. So construction loan is kind of the last resort, and it tends to be a more expensive option, especially it's not recommended for a primary residence. It's really mostly for investment properties. And then the other option too is just a personal loan. I think that was number 7. You can share with them this webinar. Let's say your family members that may have some wealth, that may be interested in investing in your home, and say, look, there is return. We will be able to potentially refinance out of this, but I don't want to take off on financing, although it does pay to leverage. Don't forget, mortgage interest is still a write-off, but there are personal loans out there in terms of talking to a family member. And so to recap, like Anna said at the beginning, finishes are a big driver of construction, and there are not a lot of economies to scale. So if you're thinking, oh, I'm just going to build a small unit, every trade needs to go into building that ADU, and try, if you're really worried about finishes. An example is the ADU that we're looking at in this picture with the beautiful concrete, and that is a very expensive ADU we're looking at. That is not like, oh, I'm just going to build an ADU for $200,000. No, that costs a lot more. I'll tell you that right now. I hope the person that built that isn't listening. Anyway, again, plan on checking in about refinancing after the ADU is built. You got to spend money to make money. People don't want to bite off these higher interest rates. I get it. It's a bit scary, but at the same time, you're not going out and buying a fancy car. You're not taking a nice vacation. You're investing in your home and improving your home. And like to say, ADUs are a win-win-win. You're solving for housing issues. You're creating more housing. Even if it's for a family member, you're opening up more housing for somebody else. You're increasing your home value, and you're also potentially creating an income stream. You may have now rental income from that property. So super important and super helpful. There's not much of a reason not to do it, unless you don't have the space. Here's my information. Please reach out. I am low-key, no pressure. Often, like I said, talking with people quite in advance to help them get started. Oh yeah, we were going to talk about some scenarios, right, Anna?
Yes, thank you, Lindsay. That was a great overview of the products available in the market. So what I wanted to do now is throw some scenarios your way because obviously everyone's coming at this from a different circumstance, different context. And so wanted to, give to you a couple of different scenarios and let you reflect on what guidance or advice you would give people who might be in this situation, who are looking for financing. So the first one is intergenerational financing. So let's say you're looking for your aging parents to move into an ADU or vice versa. You have adult children who might be interested in moving into an ADU. Are there co-financing opportunities or what would you say to a family?
Absolutely. I'd say 100%. Let's have that conversation. It's happening all the time. Family members wanting to build an ADU for their children, for their parents, for family, friends. It's happening all over the place. And there are definitely ways that we can look at how to all finance together. Those that are going to be living there, those that maybe aren't living there, maybe some are struggling with qualifying on their own. Can we bring in a co-borrower from somewhere else? There's lots of options in terms of co-borrowers to help qualify, and then also in terms of all being together in on this project and kind of going in on it together. So absolutely, I encourage that, and I'm seeing more and more of it.
Mm. Yeah, intergenerational living is a really great use case for ADUs. So I know
Super cool. Well, I
feeling.
think it solves
Yeah.
for so many issues where
Yeah,
everyone still
absolutely.
has their space, but you're all together and helping one another out. And I think we're all lacking community, and we've
Yeah.
really created this unique single family zoning that doesn't really work for a lot of people. It's kind of nice to have
Mm.
a little more of a community. Yeah.
Here, here. Yeah. Okay, so let's talk about someone who might be on a limited income. Maybe they are, asset rich. They have a house that they've paid off, but they're concerned about qualifying based on income. What would you say to them?
Say, let's do an exploratory look at things and see where you are, because the income may be limited on what we are all kind of attuned to thinking in terms of the conventional way that you need to have financing, which is your income, your tax returns, and all of that. I think people would be surprised that there are definitely different ways to look at that. There are some options too with more like some FHA products potentially, where you might be able to go a little higher on your debt to income ratio. So I encourage people, if they don't think that they're qualified, to completely reach out and be sure, especially if they've only gone to maybe one bank or lender or two. I encourage you again to talk to an independent mortgage officer who can look at you as a whole.
Hmm. How about someone who's nearing retirement?
Yeah, same thing. I'd say talk to your financial advisor as well as, your mortgage officer about what you may have in terms of what your options are and whether or not it might make sense for you. Those can also be a no pressure quote, just to see what you'd be looking at for that without, diving into committing to anything. So that's important.
How about someone who's planning for a rental property? They want to rent their unit out.
Yeah, there are such a great investment opportunities, and there are for investments, there's quite a bit out there in terms of, I guess it depends on the circumstance. Like there are ground up construction, fix and flip type of loans for investors, which would be a short-term construction loan to be able to do that if you're, depending on what your exit strategy is. And then if you are already an investment property owner and you have equity, there are definitely loan products out there to tap into that equity, not qualifying using your income, but by the income that the property generates, which is called like a ratio loan. So there's several products. And again, it's so important to know everyone's scenario is so vastly different. It's very important to talk to someone so that you know what those options might be.
And I think you mentioned before that there are products now that underwrite to future income, but those, if I'm not mistaken, tend to be offered by credit unions most commonly.
From what I understand, yes, and I don't believe there are many. Believe there may be one, like you mentioned, in San Mateo. I
Mhm.
also know of Redwood Credit Union, where I believe they will use the future rental income to qualify. I cannot say if they will do both. Like, I don't know if they will allow you to use the future value and future rental income.
Mhm.
I can't say, but that type of product, to my knowledge, does not exist. It is just a bit too risky for lenders. And I think rightly so, because if you're really pushing somebody to potentially say, well, I'm going to rent it out, but not rent it out, that could, cause somebody to potentially be over their head, and that would not be a good thing.
Yeah. And the last circumstance is if you're buying a new home and building an ADU, which I think you referenced in one of your prior slides, but maybe you could just talk about that for a second.
Yeah, absolutely. Yeah, these are relatively new rules that have come across through the Fannie and Freddie are like the Federal Housing Administration. Um, they are great for those that want to buy a home that maybe that they're just not finding a home that has an ADU. You can buy the home and get the funds to build your ADU, and or you can refinance your existing home and get the funds to build an ADU. Among there's many different other benefits, but in terms of what it can do for an ADU, that's what those can do.
Great. Thank you. Okay, and this is the last thing we wanted to talk about in the slides, which is taxes. It's a question that I know comes up a lot. On the property tax side, the thing to know is that if you build an ADU, your main house will not be reassessed. So you can generally assume that the increase in property tax base that you'll be responsible for will be just based on the added value of your ADU. With that said, it's important to reach out to your local assessor's office to get individualized advice. The San Mateo County Assessor's Office link is right here, smcacre.gov/assessor, and you can contact them for more information, but know that your main house does not get reassessed when you build an ADU. On the income tax side, when you're looking for financing, Lindsay, I'll punt it to you to give a couple of points.
Sure. On income tax, yeah, it is again doing a deep dive with those especially that are self-employed, me included. I'm self-employed, and when we're doing our taxes, we want as many write-offs as possible, and those are great for taxes, but can shoot us in the foot when we go to try to qualify for the traditional mortgage. So do it's it's a consideration. If we need, in terms of conventional, we need your past 2 years tax return. So it would involve quite a bit of planning with your CPA to potentially redo your taxes, or sorry, like going forward, reporting differently or not having as many write-offs. But what I can do is look at different ways to qualify. So a lot of the times I'll look at if you're self-employed and you've got a good amount of income with your bank statements. I can do a bank statement income calculation. So if, tax returns are a consideration, but at the same time, it shouldn't be too huge. I'd say, do what you need to do, and we can always come up with maybe an alternate financing solution.
Great. Okay, I'm just looking at the Q&A that is in the chat, and there are a few other questions that you and I can go through. But in terms of what's come into the chat, one question that is not about financing, but about permitting, probably from the first part of the presentation, which is what if we just want to build something small, like 190 square feet, would we still need a permit? Yes, you do need a permit. The minimum size for ADUs is 150 square feet, so you can't get much smaller than what you're thinking. But yes, you do still need a permit.
And I say also you
Yeah.
want to have a permit because you do not want an unpermitted structure. It can be a nightmare. A
Yeah.
nightmare. Try if you ever go to sell your home and or have any issues like doing any other remodeling. I've firsthand witnessed that as a builder. So I highly recommend, and it will help increase your property as well by doing that.
Yeah. One thing to note on unpermitted units, which probably is not relevant to folks attending a financing webinar, is that the state has made it significantly easier to legalize unpermitted units if you happen to have one on your property. So that's something to be aware of, that the state law around that has recently changed. And like Lindsay said, not a great idea to have an unpermitted unit, and it can be scary sometimes, and people are concerned about code enforcement, but there are amnesty laws in place for ADUs, and like I said, legalizing unpermitted units has become a lot easier. And depending on the state of your unit, maybe a lot less expensive, of course, than building ground up. Okay, Lindsay, I think someone's asking for contact information, and I put in my contact information. I don't know if they're asking for mine or yours, so you can answer that on the chat. I have some questions that I wanted to just chat with you since we have a couple of minutes left. So one of the things I wanted to ask about is appraisals. Do you have advice when it comes to appraisals?
Well, appraisals we have no control over appraisals. When an appraisal happens, we are completely hands off. And so that appraiser actually reaches out when it's ordered to the homeowner, will schedule it with the homeowner. It's really like that we have no control over those things. We're kind of at the mercy and should be of the appraiser. I have heard very much in the past. I am not hearing this at all, 100%, nor have I for several years. At the very, very beginning, when people were starting ADUs, I heard a few nightmare stories of appraisers not taking in the full value because there were no comps. And I have not witnessed that, seen it, heard of it for quite some time. But I think it got around because I still hear rumblings of it. It's like, oh, well, I don't know. Is my home going to be worth it? From what I have seen, it's hands down, again, that 18 to 35% is, I think, a really rough, like accurate but rough figure. It will depend, and it's quite a range, but it does depend on the location and what you've built and a lot of those factors as well.
Yeah. The popularity of ADUs probably helps out here a lot because you have 1 in 5 units in California as an ADU now. So there are probably more and more comps by the year to make those appraisals more accurate.
Yeah.
So question, and you've referenced this a couple of times, the economic uncertainty of it all. We're speaking on a day when stock markets are quite volatile, to say the least, and a lot going on in the world. You mentioned that that's actually been good for rates, but one of the other things people might be concerned about is construction costs given tariffs. What
Yeah,
would you say to
big time.
people who are worried about that, or what advice would you give? Or do you have any insights, to the extent anyone has any insights, on what's going to happen to construction costs?
Yeah, construction costs are only going to go up. it is what it is. And the tariffs from what I can see, are only going to make it worse. Um, I, I, I guess I'll plug, green building for a little bit here and say that the way that we build is very antiquated with our stick frame construction. And I truly believe that I know there are, and am building better with prefab, modular, and even manufactured ways of building, or just the way of the future. And we really, seeing that California is behind the times. We really, this is I think that it's going to play into the cost of, like, with labor and materials and all of that, and people not wanting to stand in the hot sun, and then also fire danger as well. All of these factors are coming together. And what's so interesting is, like, how our phone, it's my cell phone, has changed so much in 15, 20 years. Construction hasn't changed in like 150 years. So I'm a big proponent of getting away from what is wasteful and not wise, and building better and greener, and solving for our housing crises responsibly.
Yeah, absolutely. And I definitely want to do a webinar about prefab and green building as well, because that's a big opportunity in the ADU space.
Big time. Yeah.
Okay, last question I'm going to ask you, which is kind of related to financing, but feel free to interpret it as broadly as you want, which is, what are the common mistakes that you see people make in building an ADU or financing an ADU? You can name, top 2 or 3 that you
Sure.
advise
Yeah.
against.
Well, one of them, really, I just felt so terribly for this poor person. I know in San Diego, they've really relaxed the ADU laws down there. And this person had gone ahead and done plans for 8 units in their backyard. And San Diego apparently allows for this. And she went all the way down the line with plans and permit, and had spent a lot of money doing that, and had not checked in on financing. And because it was 8 units, which goes into a commercial realm, but it's a primary residence, and she was living there. Um, I there's no financing out there like that I know of, and I don't I know a lot of different financing options. I even private money, like and that's why I do a lot of private money. That is, there's nothing that I could help her with, and I felt terribly. So that is the big one, is know that you are able to obtain this. Do the pre-approval-ish thing, with somebody to like me, like a mortgage officer. Know that you will be able to do this kind of construction and spend thousands, if not tens of thousands. Um, and then another one too that I talk a lot about is, and you touched on it, Anna, is bathrooms. A lot of people will say, well, I need 2 bathrooms, and I highly recommend a bathroom and a half, but it's rare that 2 people are showering in the same spot at the same time. So that, again, finishes are such a big driver, that maybe just a bathroom and a half for that. And be mindful of those finishes. And where are you building? I have a lot of people that are like, well, I've got a big backyard, I'd like to build my ADU way over there. But they're not thinking about the fact, like, well, now I've got a trench all the way there with the utilities. So that in and of itself could add a huge amount. They're, not thinking, like you said, with the one wall of plumbing and electrical. Yeah, like things like that where you can get savvy and save, are huge.
Yeah. And that's a place where professionals, architects, designers, firms can really, ADU professionals can really
Yes,
help you
big
avoid
time.
very costly mistakes. It is a complicated project at the end of the day, even if it's a small house.
Yeah, and to that point, this is not just oh, I'm just going to build an ADU. This is huge. It is a big construction project. And I do recommend using design and building professionals. I do recommend using an ADU company, unless you're just sitting around twiddling your thumbs, which I doubt you are. This is like a part-time, full-time job managing all of this. And so I do recommend leaning on those professionals to help you and guide you and prevent you from getting into some errors.
Well, thank you so much, Lindsay. This has been great. I'm going to close out the webinar now. I do see that there's a question in the chat about putting up your information again. So I'm just going to do that for the person who asked and for anyone else who's still on who wants to see Lindsay's contact information.
Thank you.
But thank you everyone for joining and have a good evening.